The market, previous week I talked a little bit about it, and that was all about employment numbers. And the market rallied. We saw interest rates fall. Usually after a pretty good little improvement in interest rates, we see this flat market, and that's what we've seen this week. Up a little bit one day, down a little bit one day. Yesterday we had a little bit of a good day. Today we've, at least when we came into this meeting, we're having a little bit of a down day. So it was this treading sideways that we're looking at. Really, everybody's kind of anticipating next week of what's going on at the Fed. And right now, I don't know of anybody that's not convinced that we're going to see the Fed come in and lower rates by a quarter. Some people are betting that it could be a little bit higher. The one thing that I really always like to make sure that people understand with all this talk about the Feds and lowering interest rates is, in reality, the Fed lowering their rate doesn't really have anything to do with mortgage long-term rates. And you have to remember that really when they're talking about the Fed, that is short-term. And when people say short-term, they don't know that means overnight. That's not for a week or a month. That's the bank is borrowing money overnight so that they can operate tomorrow. And so that rate dropping doesn't really say our long-term 30-year fixed-rate mortgages are going to get better. So that's a lot of times from the real estate side, and even from a lot of loan officers, all this talk, consumers hear it and start going, I bet you get calls. I heard interest rates went down today. Mm-hmm. The Fed's lowered the interest rate. So why isn't my mortgage company, my loan officer, he's not giving me a better rate? Do you get that all the time?
All the time. I get it from sellers right now.
Oh, sure.
So the market's going to go crazy because rates are coming down.
Oh, yeah. So, now I always like to make sure there'll be a little bit of a long-term trickle-down effect, because if the banks are, have less interest rate that they're having to pay for their money, sure, it will eventually trickle down to, mortgage-backed securities. But so it does have somewhat of a symbiotic relationship. They do look at each other. I'll tell you what would be worse is if they don't lower the rates, the market would go crazy. We would see our market just fall off. If they go what they're supposed to, we probably won't see any drastic decreases because our market is a futures market. And they've already baked it in, and they expect it. That's why if it doesn't happen, it's a big deal. But when it happens, it's like, yeah, we knew that.
Well, and if it doesn't happen, when we start seeing, we're expecting a half and it's only a quarter. So if it's not as significant as the market's baked in, then we get the reverse effect where they lowered it and rates went up, and then you're having those conversations with clients, and they're going, wait, but hold on, how is that possible? But it's like, well, it's already been trending. And so the education in advance of those meetings is always a huge piece. But yeah, like there's this expectation that it's, instant.
Yeah. And there's so much news right now about the Feds. It's really weird. I think that we've really started fixating on the Federal Reserve, especially over the last year, whereas I've been doing this right at 40 years. I've never heard so much news about the Federal Reserve and what they're going to do. And I'm sure that it's a lot of, we were all used to those low interest rates. Then it went up, and now everybody's hoping that they're going to come down. So anybody that's listening, they're hearing all this news. I mean, you got one Fed governor that is in trouble because she might have committed fraud, and so President Trump is trying to get rid of her. And then you have another Fed governor that resigned. Her name was Kugler, something along that lines. And we have someone that's been nominated. The Senate is voting on him today, matter of fact. Might be able to get him in before next week. So there's all this turmoil. And Powell, the chairman, is his term ends in May, and so there's like 14 people in line for his job. So there's just tons and tons of information, kind of overload about the feds, when in reality, we look at long-term interest rates as a mortgage company, long-term mortgage-backed securities, and all of the Fed talk, I think, sometimes becomes kind of distraction on the day-to-day, what we're doing, the programs that we're offering, having to explain to borrowers, don't wait. There's nothing that says that we're going to see lower interest rates. Matter of fact, last September, we were in this exact position. Exact. We had seen interest rates high throughout the year, and all of a sudden, the interest rates started to inch down. We had Fed meetings coming up, and we knew they were going to lower the rates. They did, and then all of a sudden, in October, November, if you remember, interest rates inched back up. So we're in the exact same spot we were last year. I'm telling people, yeah, I'm kind of bullish on the next 6 to 12 months. I do think that we'll see slow, steady improvements. But I'm not telling people, hey, just wait, it's going to get better. I'm saying if you got it, close it now. Do it. Don't wait. We can always refinance.
Agreed.
Matter of fact, we have a great refinance program where we'll help you with your closing costs to refinance. So, I mean, that's what I would be saying to people right now is, yeah, I do think that I think that things are great. I think it's going to get better, but get in right now. So that's where we are with rates. It's been flat the whole week.
Agreed.
Flat's a building a level of expectation. I have this conversation a lot. I have family, friends that obsess over it too all the time. The idea of being prophetic enough to time rates perfectly is the greatest flawed level of thinking.
Oh my gosh.
In real estate ever. It's like, find the house that works, like you said, in the area that works, at a price point and a monthly payment that works, and optimize your overall monthly expense component when you already have the house. But the idea that you can, first off, is that house even going to be the one that's available when rates are like that there's so many people that are trying to, or feel that like they should be, that they're not making a good decision unless they time all those things together. And I think that's one of the common education things that I find we do need to continuously re-explain, repeat, just engage with people on really the home. You have to live in it. It has to work for you, and you can refinance it. That's an open-ended equation for you, barring your life circumstances changing. That home's not going to be available in 6 months. It'll have sold.
It'll be gone.
Yeah, and I think if all things stay the same and the rates go down, great. But most likely that's not what's going to happen. You as a buyer, now we're going to have to, where it might not be as crazy as, hey, they go down, now we're competing, but I could get you $25,000, $30,000, whether it's a price reduction or a credit. You can't get that anymore,
exactly.
And you just waited, and so you could save $100 a month when you really lost out on $30,000.
$30,000, right? Well, that's in the best case where you still get the house, or
exactly.
now there's nothing that you even want to buy that fits the, and that
and
I
you're
think,
getting a lesser house
exactly.
for more money.
Yep, exactly.
And I always look, the historical perspective is always, the older you get, the more you like historical perspectives. But in 2020, as we came out of 2019 and was moving into 2020, there was nobody out there that would have told you that in March, all of a sudden, rates would start just taking a dive. March, April, May, June. If you remember, 2019 was not that great of a year. I mean, it was probably a little bit better than this year, but it wasn't that great of a year. We were all kind of looking around going, yeah, it's this, kind of sketchy right now. And as we were going into 2020, a lot of us were thinking, how are we going to pull back on expenses and some of these things? And I was at a conference in March, the weekend that they came out with, hey, we're going to do 2 weeks to get ahead of COVID or whatever. I was at a conference, and everybody was talking about it.